Yeah, all right. Heart Pumper coming to you from closingprint.com. We're going to go through kind of my weekly workflow chart review. Got my notepad here, and I jot down some stocks, and I'll kind of show you guys. Again, I have a video up on my YouTube channel, but kind of how I look for stuff, and then how I kind of look over my positions and manage those as the week goes through. My weekend workflow, I try to keep it to about an hour if I can. And then every night workflow is 30 minutes or less, and I set myself a timer and try to be as efficient as possible on that. So first up here, we just have the closing print .com positions. I always like to flip through that because I don't take all the same positions that CV does, but I like to look through, and I'm in some of these, but I just like to look through and see what he has week through the week. And then I have a sheet pretty much set up like this for myself that I do. And then I look through the closed positions also and kind of see, what we did, scale in and scale out through the week. And then I will take, obviously has the entry price listed. So even if you're not in these, go ahead and pull up these tickers and look at the entry price and maybe figure out why we're in the trade or why he's in the trade, and then where it might look like it's going to take profits, or these trades that are not working, maybe, what could have been done different or nothing at all, or kind of how those trades are being managed also. I think that's important. And I do a post-trade analysis on all my trades, winners and losers, just to figure out if I executed correctly. And if I executed correctly, I'm fine with that. But if I didn't execute correctly, then that's where I need to, review and kind of see what I did. If I executed correctly and my stop loss was hit and I lost, it is what it is. I have no problem with that. But more often than not, it will be an execution point on my side that went wrong. But also it could be that the stock just didn't go the direction that we were anticipating, and that happens more often than not. So I'll just go to stock charts. The first thing I do, like I said, is I do sector review weekly, and I have not updated these lines. So this is kind of just coming in blind today. I figured this is the best way, because if I had done all the pre-work, then you guys wouldn't see what I do. So basically I just start top to bottom. I'll have the indexes in here. So I just look at the SPX, and it's the same kind of area that everybody's been discussing. We're reaching this overhead area. The 40 MA is up here a little bit, but we reach these overhead areas with a reaction. What is interesting to me though is that we actually held the previous week low on this candle, and we're kind of forming a flag here. And all in all, I'm, I always lean more positive. I don't necessarily, yes, it's probably, bullish. I try to be neutral to bullish unless, the market is really showing me that, it's bearish. But all in all, we actually held pretty well this week. If there was a place that we could have sold off, we could have reached it and then, definitely dropped quickly because the end of the month is coming. We'll go into the end of the month this week. We had OPEX on Friday. So end of the month, institutions, could have been getting rid of shares towards the end of the month, and we didn't really see that yet. So we're going to kind of watch that this week and see what happens. And then next of the month, we'll have first of the month institutional money deciding to get put into the market if they decide. So, and we're also kind of coming into May, and then we'll slide into June, July, and August, which, are more often than not slow months for the market. And so, we could see a little bit higher move up, or we could just be range bound into summer. And so it's going to be interesting to watch for me. IWM weekly actually started showing some flow this week. Banks and some other areas started getting involved, which is definitely helpful for the market, because if IWM's lagging, it can kind of be like an anchor dragging us down. We did reach this kind of 123, 124 area. So I want to see how this reacts and moves forward for the week. Let's go ahead and go to the next one here. QQQs obviously have been leading. NASDAQ, has been pulling the market up with it. So we did kind of reach this previous area where we broke down and there's a gap overhead. Again, this could have been an area where we sold off quickly and, everybody, got scared and dumped their shares, but we didn't. We did pull back, but we held this weekly low and actually finished almost in the top of the range. So, there's more people that can talk about candlesticks and make assumptions. I'm just going to watch the price. SPY weekly the same. What I would ideally love to see is a flag build here and maybe even a pullback down into here, work off some overbought areas, and then get some price consolidation and some more juice. And if we get above this 298, what is an interesting aspect for me is there's not many trades here because people had dumped their shares from this point here to here. So if we get above this 298, it's really going to be interesting to see if this just kind of has clean air and takes off. Let me throw the volume by price on there and see where we're at because I have not looked at that. Oops. Let's see where we're at on that. Okay, so this is exactly what I'm talking about. I hadn't even done this yet. So this is a perfect example right here. What is actually surprising is we're above these big chunks here and trying to work through this area here. So this may be a little bit choppier going into this area, but over there, there's nothing, clean air. So above 298 is pretty much where I'm putting 298 to 300 is where I'm putting my line. And if we get above that, that may be an area to put more fuel to the fire. I mean, there's just nobody up here to stop anything. And I would believe shorts would probably have to cover above here and then we would see if new money would come in. But again, it's been a heck of a move off of the bottom. So all the sectors are looking about the same. We're reaching these overhead areas where we broke down from. So consolidation to pullback. XLC actually almost finished. I did finish above the previous week high and in the top of the range. So definitely strong for the week. XLE, I see this flow the past 3 or 4 weeks. For me, I'm just still not interested. I know people are trading it in the room and people have positions. It's great. I mean, because there's going to be some great opportunities in this if we move higher. But for me right now, it's just not a place I'm going to look. I'm going to stick with the leaders. I would like to see XLF get a little more flow, but XLC and XLK are pulling everything up. So XLK, yep, looking good. XLP, same deal, reaching kind of some areas overhead. XLRU is completely beaten down, but actually got a nice bounce. So we're seeing some pullback there. XLU, same deal, overhead areas there. And XLV, leading sector. So again, I will be looking for opportunities in this space. I've been in quite a few XLV components, so XLY and SPX. Okay, so then what I do is I go to sector review. I'll sort by summary, and then I will note for the week what the strongest sectors are. Summary 1 week. XLE actually was the strongest sector. So the least down was XLC was positive for the week, and then XLV. So these have been my 2 to focus on. Now I will put a few XLEs on. I would put a few XLEs on my watch list, but I'm probably not going to enter positions in those. Maybe XOM or some of the leading XLE stocks. But for me, that's just kind of off limits at the most. So XLC, so then what I would do is I would go to my XLC chart list, which I have down here. Well, okay. Guess I'm gonna have to redo my XLC chart list. I'm not sure where that went. Okay, so what we'll do is we'll just look at XLK real quick. I might have accidentally deleted it. I was cleaning tons of charts out So what I'll do is I'll go for 1 week, and these are the stocks that obviously have been leading. So you can take a look at those. I think PayPal has already had a really big move. Yeah, see, nice flag here, Avago, nice flag here, Adobe, CRM. Tried to get above the 200-day, but it's flagging. Cisco, nice flag, 200-day overhead. Facebook had a nice move on Friday. Google, this is the one I'm really watching here. Again, earnings are going to be coming out, EPS, so make sure everyone checks those. I am not checking those yet, but I will do my due diligence. IBM had a nice move. So you can see almost all these are looking the same. Flagging, INTC, nice move. But we're going to be in the heart of the earnings season for some of these big stocks. So NVIDIA, just doing well there too. PayPal, oh wow. I had marked this up and that was my area, and there you go. Nice test of that area. I think I had even put this in here for somebody wanted me to do a chart review. Can't remember who it was, and I actually drew this out, and there we go. So, but that is not one I'm in. Can't catch them all. Qualcomm flagging under 200-day. So lots of candidates in this XLK, XLC sector. So I would look at those, I would jot them down on my notepad, I would check earnings, and then from the daily, let's just pick out PayPal, Qualcomm. Let's go back and pick out one that I don't have a position in but want to get in, which would be Adobe. So then I would flip down to the 60-minute time frame if I was looking for a swing, and I would mark a couple areas and I would note those. Obviously pretty easy to see where I would prefer to get in, down here around the 325 to 329 area, but 348 or 350 overhead. So if we got a reaction, and so if we got a reaction of price up here around 348 to 350, then I would watch price hopefully consolidate around here. So then I would set an alert here in Interactive Brokers, so that would notify me, and then I would start to look for a trade, and then be ready for a breakout type trade. So again, what I'll do is I'll take these, I'll write these on my notepad, which I have right next to me. I'll jot down levels. I'll go in Interactive Brokers, which I have all these in Interactive Brokers anyway. And then I will set alerts if they're not already set. But what happens many times is these stocks are the same stocks that I trade over and over. So the alerts are already set. And I'll get multiple alerts sometimes on the text messages that just notify me that I should go in and look at something. And hey, maybe there's a trade set up. But obviously this, kind of flag here in this range was ideally. But so I'd set an alert for 348 to 350 to watch to see what happens when price gets there. I'd set an alert at 342 and then set an alert down here just above this level. So when price gets there, it'll notify me. But then that doesn't mean I'm just necessarily going to pull the trigger and enter the trade, but I'll be able to flip over to the chart. And again, I'm not worried about jumping right when the alert goes off, like, because I may be out doing something else, but I'll save those alerts on my phone, obviously, and then at the night when the market's closed, or if I'm able to get home in the afternoon, and I'll look at it and see if it fits my risk reward profile, and then I can enter it and then go from there. So that's kind of my flow and how I do this. So again, these are just the top 25 weighted in XLK, and sorry about that, but I'll redo my XLC chart list. And all of these sectors I have listed here are just the top 25. So we could go in, there's XTL. Wonder if I meant to put X. No, that's XTL, which is actually, so I'll go in and redo my XLC. But again, top 25, you could even narrow it down to the top 15 if you want. Actually, most of these are top 20. Because past a certain weighting, percentage weighting for the ETF, you're not going to get the stock's not going to really affect the ETF much, so it may not move as much. So that's my sector review. That's my breakdown in each sector here. So then I go to Investor's Business Daily, which I posted in the room. And what's nice about them is they have tons of stock lists to get growth stocks and leading stocks that are easy to download. And what you get is you get this right here. hold on one second. So what you can do is you can get the IBD 50, and it'll take you to that, and it'll give you the list, and then you can do an export. Oh my goodness, asking me if I'm not a robot. Well, yeah, let's get off of that. Okay, so anyway, it'll export. You can export to Excel, and you just copy the tickers, and then you paste them in a new chart list. So that's what I have done here. IBD 50, here you go. So I will look through these very quickly on the IBD 50, and Adobe keeps like staring at me for multiple days. So let me check what the EPS is on FinViz, and then I will double check other places. So March 12th. So we still have a little bit of time. So we might get an earnings run. So this was one I would put on my watch list, at least try to get opportunity, maybe a week to 2 week swing trade before earnings would be nice. Autodesk flagging nicely. All these are flagging very well. So I want something that's above the 200 day, and some of these IBD stocks are not above the 200 day yet. So those would automatically throw them out for me, at least on these. AMD, nice. BMY. So this is an interesting one to me that I've traded over here and had a nice trade in, but they do car parts for used autos. So that's going to be maybe interesting moving forward. Dropbox has been a really good looking stock. Not sure when their EPS is, but I would assume more people are using that because of the stay at home. So this is one I'm looking at to get into a trade. Obviously you can see this flag here, and look to get a position. Now, if you get into this position, we'll just go through this. If you enter this position, ATR on this is probably pretty tight. Let's see what the ATR is. So the ATR is 95 cents. So let's just say you use some system that was 2 ATR. So you at least have to set your stop 2 ATRs away. If you want to do 1 ATR, that's fine, but more than likely we could come back here and test this level here from 18 to 19, which is just below the 200 MA. So I would be putting my stop down around here somewhere above all these moving averages, depending on when EPS is. But then that would definitely tell me that I'm wrong with the trade, and I would, size appropriately and position, and then not have to watch it tick by tick. Just let it go. And if somebody, if somebody's going to step in and wants to own quite a few shares, then hopefully we get a push up here to 23s, 24s, and then we can take some profit and tear our stops up. But again, so that's how I would look at that right there. So I go through the IBD 50. I flip through all those. I'll note those on pad. So then the other thing that you can do is when you do this IBD download, it gives you a whole spreadsheet in Excel, and it does this nice thing that shows you. Sorry guys, give me 1 second. These robot things are crazy lately. Make sure I pick the right bridges here. Pick traffic lights. I don't know if anybody else has been getting this all the time, but it's like they've been doing this. There we go. So what you can do in IBD is if you have a subscription, which I already downloaded there, you can punch in a ticker and it'll show you the institutional. Also, you can sort here, which is nice. They already have that for you, or you can click on the ticker. So we can go to Dropbox right here, and you can click on the stock report. Yeah, the IBD is digital online. It's like $24.99. It's pretty cheap. So here's another awesome thing about IBD that I love to use is, so it gives you a stock rating. Composite rating, you can use it if you want. Basically, it's just saying that the overall rating is pretty decent. It gives you this stuff. Again, these are all stuff that you can go by. So we can look at the EPS ratings, so and the growth. So some of these are not great, but that's okay. So what I like to look at is if increasing fund ownership here, if the funds are interested in this, and there's been 6 increasing quarters of fund ownership. So that tells me funds are putting money to work. Percent change, they haven't increased, which most of these won't increase from everything that's been going on. I also like to see this accumulation rating up a little bit higher, but it's okay. You know, increasing quarter fund ownership is great. And that's kind of what I look for there. Then also you have other opportunities in here for charts to look at. And usually I'll just pick the top 5. And I believe AYX, everybody knows what it's done lately. Had a nice bounce and just kind of flagging also. So it's in the same sector. So it just gives you other stocks that are just as strong to look at also. So that's kind of how I use that quickly there. So go back to that. And so DXCM, have a position in this, posted in hashtag trend following. It was holding the 200-day on this big move down, you know, in the market. And this was like a flash, like crazy buy signal for me just because it was holding. So I started a position down here on this breakout and added to a position here. I think somebody had texted me or sent me a message about this. And so yeah, so what's nice is if you get in the right position, I mean, I think I only started with like 25 shares down here. I mean, it was hardly anything at all because on this breakout at 225, my stop was going to be down here at 200. So it was a 25, you know, $25 stop. So on 25 shares, I was risking $500. So I can go into all that positioning size, but I was risking $500 for this move here. And then, so I already have my average here, and then I added up here, and then we have here. So from I would think I was like 225 or 227. So we're almost 100 points on the 25 shares. And then on my ad, right around in here, depending on where you're at, you're 60 points on that. So, and then depending on how much your ad was, let's just say you added the same amount. Let's just say you added 25 shares. So you're 50 shares total. And then let's say your average, you know, you're up, you know, $50, $60. I think that's a pretty good haul for holding the shares and basically having a $500 reward here or risk here. And then what we've got out of this, probably what would happen for most people is they would have got shaken out here. But really what happened is it just come up to this area and started building another flag. And I'm going to draw these flags in. And I look as in flags and boxes. I know everybody is like hard to tell, but, and this is what happens with price action, even intraday, and we'll draw these. What was impressive to me is that we pretty much blew through this 306 line on this day, came back and tested it, and now it went, you know, back up again. So this is how my swing trades and manage for IBD, long term, and hold on to them. And you can tier out. I mean, if we got in here and you were worried about it, you could have tiered out, you know, 10 shares and taken a profit of $600 or whatever you wanted, you know, $500. So then you're a free trade. So let's just say you took 10 shares off at plus 50. So, and then raised your stop up to somewhere below where this flag was consolidating. So you already took out the 500, you got a free trade. And if you would have been taken out up here, let's just say you would have gained another 20 points, another $200 on, or another $300 on the 15 that was left. But you were able to capture this whole move. And the tier in, tier out thing, like CV and I were talking on Friday, it's the only way to catch all these huge moves. I mean, I couldn't have entered 100 shares here and held with a $20 stop. I mean, that's just insane. Okay, so, or even, you know, 50 shares because of where the market was, because I had no clue. We could have held this and just totally bottom dropped out. We could have came in and this could have gapped down to 150 or 160. So that's the reason I entered 25 shares. I was okay with my risk on my account of losing all of that. Just saying, you know what, this is a, you know, whatever percent loss on my account at the time when I figured out the volatility, and that's fine. But this is how we capture these big moves. Now, if I was watching this tick by tick every day, I'd be scared out of my wits because of how much this stock moves. I mean, it moves 30 points. So, you know, we could go to the 60-minute, use a trend following type system. We're above the 20-day daily, which is the 130 here. So if you wanted to keep moving your stop up there, it's perfectly fine. But I'm just saying, if I was watching this tick by tick from 280 down to 250 on 10 shares, 30 points and it was $300, a lot of people would have been just losing their mind. But that's why I tell people to trade smaller, trade 5 shares. Let's just say you entered 1 share here. Okay. You're up 100 and some dollars, in this amount of time. Let's just say your account was a $25,000 account. I mean, that's pretty decent, to catch this whole move and be able to stay in this. I mean, I would say I would not have entered just 1 share here. Probably 5 shares would have been good for somebody with a $25,000 account. And then if you have a $20 stop, you're only risking $100, which is a very small percentage of your overall capital. But to capture this move, you're in great shape. But again, it takes the ability to have patience, manage your risk, and sit through, maybe the gut wrenching of, oh my gosh, it pulled back 30 points, and I lost a certain amount. But we forget of how much of where we entered and then how much gain we already have. So I think that's, problem for most traders, doing, trend following type things. So hopefully that helped a little bit. Again, so then I'll just flow through the IBD 50. We're at what, 130? I'll flow through the IBD 50, grab a few more of stocks that are looking good. And so this for me is off limits, IBD 50 again. And also what I look for is the volume. Some of these IB stocks are only $200,000 to $300,000 volume. So, I mean, there's no reason to be in those for me. Now, they may move for some people and they may be fantastic. Pat you on your back. You did a great job. But for me, just my system, because I want to hold a little bit longer term, I need to have, institutional support and volume. So light, I traded on Thursday or Friday in the room, and we had a very nice trade on the intraday, but it was just an IBD 50 stock that you can trade intraday. I also tell people that. So that that leads me to this other point. That podcast I posted in the room from Joe Fahmy and Tom Canfield, I encourage everyone to listen to that, because it's the same struggles that everybody deals with every day. Everybody gets mad, everybody gets upset. It happens. It happens to all of us. I screw up every day. But what I do is I manage my risk, and I'm wrong tons of times. I mean, my win rate may be only 30 or 40%, but if I capture that move like I did in DXCM, I mean, that pretty much takes care of all of those small losses, all of those managed losses that I might have had. That move takes care of all that. And that's what we have to get to, is just because you have one loss or one stupid mistake, you're still able to do this. And the Tom goes over that also. But yeah, I mean, I think the other day, last week, I was day trading something. I hit the wrong button. I hit the sell button instead of the buy button. So I shorted the stocks that I wanted to buy. And I was just like, unbelievable. It's just because I wasn't paying attention. And obviously I went ahead and, bought them all back real quick. And I mean, I think I, might've been like a $25 loss or something, but it still happens to everybody. I mean, it's just the way it is. But the one thing I would say is when you enter a trade, set a stop no matter what. I don't care. I don't even care if it's $50 lower, $20 lower. Set a stop, because if your broker crashes, your power goes out, or for some reason you keel over, of a kidney stone or something and have to go to the emergency room, you have to be able to protect your capital, because if you don't have any capital left, there's no way you can enter trades again. And there's no way you can be in this game. So I tell everybody that set a stop. I don't even care if it's a terrible stop. Just set a stop so you don't lose all your money on trades. Looking at charts, we can only see what has happened. It's really hard to go through reality. Risk management is key. I totally agree with that. We can see what's happened, but what I like to do is I set areas and then I anticipate when price can get to those areas. I agree with the hindsight trading. Totally 100%. That's why when we're trading intraday in the room, I'll post a lot of charts as the move I feel like is happening. And I always say, this is not hindsight trading, guys. We caught this real time. The Google trade on Friday, we caught real time. What else did we catch real time on Friday? The light trade the light trade on Friday, I think I posted it real time, but there was a couple other charts that we posted real time. I totally agree, you know, and I'm not for hindsight trading. Yes, I'm looking at this and I'm saying, okay, you know, I entered here and we caught this move. I post my averages on my comments to show people that I'm trading and that where I got in as not a hindsight, you know, and it's not to say, hey, I captured shop at 200 points and I'm still in it and I've added and subtracted and taken profit out. It's to show you guys that I entered here, you know, and this was my stop and I'm still in it and this is my average cost and I'm in there. I'm trading with you guys, you know, I'm in these positions. So I have to deal with all the emotions, the same thing that you guys do, and the stops. You know, I mean, it happens. I'm wrong. I can be wrong. Now, what happened though is when we were getting these drops and I was buying into these stocks, I was buying small shares. I can go through this risk management, but even on $100,000 account on some of these, I mean, you should only be buying 30 to 50 shares. If you had a $100,000 account with the stop you need to place to lose the amount that is manageable on your account. I mean, that's why I don't understand when guys are like, I got 300 shares of whatever it is. I'm like, okay, let's figure out the price. Let's figure out how much you're risking and let's see what kind of hit that's going to take to your account. Well, some of these positions that people were sending me it was 15% of their account. If their stop loss would have got hit. If you lose 15%, you have to make over 30% on the next trade to make up for that. I mean, a 30% trade is massive. I mean, IBD would tell you at 20 and 30% to start taking profit because most stocks pull back after 20 or 30%. So, I mean, you know, I'm just like, guys, do you understand the positioning size? And if your stop loss is hit, how much you're going to lose and what percentage of your account is gone. So anyway, Netflix, I'm really loving this flag right here, and I would even more love it if it came back to 380 to 390 to enter, but we'll see. Now is one that I have on my watch list. I need to check EPS, but I'm loving this flag here. We retested a 200-day, so I'm pretty sure everybody can see what level I'm watching right here. Now, what could happen is we could come up here, take out this level, get everybody in the trade, and then it come back here and test the 280, 290 and shake everyone out. That is why when I enter this trade, my stop will probably not be at 290. It's going to be down here somewhere. And I know that's a huge stop. I mean, we're talking 20, 30 points. But I would prefer not to enter just on the breakout. I'd prefer to enter a breakout retest kind of thing, or maybe a breakout and then retest this top flag would be my ideal entry. But if I'm going to enter it and I'm planning on holding it to capture a 60-point move, my stop can't be right here at 290. The reason is the ATR on this for intraday moving is probably 16 to 20 points. Let's see, 16. Okay, so if I enter it, let's say 308, 10, 298, and another 6, so 292. So that could easily come back intraday and test that 290 area and stop me out and then still take off without me. So here you go. So then I'll flip over to the 60-minute and you can pretty much see the areas that I would be watching. So my stop would be down here. I mean, you could place it about here, which would be the 20 on the daily. So you're looking about 288, 285 to 287. But this is your level up here. And it has to show me strength to get through this level right now in this market. I have to see relative strength for me to get in a trade. So you can see this. So what I will do is I'll go over to IBKR. I'll set me an alert for 292. I'll set me an alert for 305. Somewhere around in 292. Actually, I might set 2 alerts here and I'll watch. And if price reaches this area and comes back and tests the bottom of the range, that would be a great entry area, depending on when EPS is, because then your stop, even if it's down here, is a much less risk. So I'd rather enter at the bottom of the range than try to be entering at the top of the range when some people are probably selling to me when they entered down here if they're swing traders. But if you're using daily or weekly charts, then this is totally different. And that's why I try to get across to people. So weekly chart, boom, 303 is your weekly breakout. And look what happened. We came up and tested that. High of the week was 308. So we tested that weekly and could not break out, but we finished in the top of the range. So if this goes above this level here, we're in a weekly breakout and looking for, 360s. And I want to be able to capture this whole move if I can, or at least part of it. Let's just say we try to pull 30 or 40 points out of that, be ideal. So that's why I would place my stop. Even weekly time frame, you're looking down here below the weekly close for this to be able to move back and forth and chop around and then catch this weekly move. Okay, 136, good. So I'll go through IBD, that'll be it. I will flip over to a Vis Scan sometimes. And I think I've showed everybody this Vis Scan. You can go on all, and you can do beta over 0.5, and then set your relative volume over 1 million, current volume over 1 million, depending on what you want to set it at. I do market cap over 2 billion because I prefer to trade the bigger stocks. And then what I like to do is I will do change like that. Oh, sort that by good change. And then I like to see what has moved for the week. And obviously we know WWE moved, W moved. I know a couple people were sending me that. That was on the 200 MA scan. So I'll just cruise through here. CPRT, nice. And then INO, obviously that's been big mover. And then what you can do is you can sort by performance, and you can sort by month, performance month, and we see what's been top performers for the month. How many tickers do I have here? I have 631 tickers. So that's that's a huge list, obviously. And, we could narrow that down some more with a couple other clicks to get it down. I like to get it down to about 200, and I'll do that every quarter, flip through a FinViz list like that. But I just like to see what's been performing for the month and then performing for the quarter. And just take note of these. DXCM, obviously. TDoc. Shucks. Sorry about that, guys. Trying to get these ads out of the way. TDoc. I know a lot of people have been trading that. That's doing well. EQT, oil and gas. And I know we've been trading that one. So Shop, been in this one. Amazon, we're in that one. Vive, I know some people were in that one. I did not take that one. Tesla and LM there. So again, that just gives you another way. INSEE also. INSEE is huge. Yep. So that just gives you another way to look at strong stocks for the quarter, month, week, and trade those. Or if they've already moved a huge amount, then set them up in a watch list and wait for a pullback and set some alerts. I mean, that's the ideal way to do it. That's what I do. So the other thing is that we look at is the 200 MA scan crossover. So I'm going to talk about Aero Pharmaceutical, which came up. Let me see when the, let me flip in the room and let me see. So it was ARWR, I believe. Yeah, ARWR. So it's a biotech, May 7th. Yeah, so it's a biotech, and so I probably wouldn't take that before earnings. But what I did find was I went to the 200 MA scan for the last day. Sorry, guys. So I went to 200 MA scan for the last day. And so we had 39. So I'll store those in a new chart list. I'll just do a new chart list real quick. And so this gives you the stocks that are crossing over the 200 day. And you can run this every day. But what happens is it's the same ones will show up because I have it set for 3 days to be around the 200 MA, even if it crosses and comes back. So I like to watch. I'll just throw it in a chart list and watch. So we'll flip through Cardinal Health and CERN, and all these XLV names are on there. CHGG, which has been an IBD name, and CV's traded it also. So back over the 200 day with good volume. So I have the volume set. Now this is one I'm really watching right here, Cigna, but they have earnings, I believe, Monday, Tuesday, or Wednesday. This was a really interesting setup to me, and this is what I like to do on my 200 MA scan. This is about perfect. So we got over, consolidated, tried to move up, couldn't at the minute, but then pulled back to the 200 MA. So that's good entry point for me with stop below there here. But earnings. So what I would like to see is, I do use volume also, but I'd like to see good volume coming in when this retest happened, but it's sort of lower. But I believe that's probably because of earnings coming in and people are not getting in the stock. So we would flip through this 200 MA scan and we'd note some. GoDaddy, actually, that flag looks really good there. Google, GSK, GlaxoSmithKline, INSM is medical. KLAC already breaking out of this here. I have to check earnings on that, but that really nice move there. So you can see what happens. This is a good example. Broke over the 200 day, or gave us an alert a couple times probably on our scan, broke over the 200 day here, but just formed this flag. And that's why I wouldn't take this necessarily right when it shows up on the 200 MA scan. And then we had the pullback, held this area, and then now we started to move back up, and now we're going to break out. This happens more often than not with these stocks. People are trying to figure out if institutions are going to get involved, and then if they're going to start buying shares. So let's look at the ATR, and then I can tell you if for some reason you were in this. So your ATR about here was 10, roughly. So that had been 152. So if, let's just say you used 1.5 ATR as your stop, you still would have been in this if you got in this area right here. If you positioned correctly, sized correctly, and managed your risk, you'd still be in this. And then if you let this try to take you out. So what I would do is I would have flipped to a 60-minute chart, and you can pretty much see the area that got tested. I mean, this area this area right in here. And this happens, guys, over and over and over again. If you watch price action, come back, test this area. We don't know if it's going to hold. I'm not going to call it support because I don't know if it's support. It did test it a couple times. You could say if it's support if you wanted to. I have no clue though. So I'm not going to just blindly buy. But when this held and we got this gap up day, if you were anticipating and watching and had it on your watch list, then this would have been a great entry. 152, 153, stop below 147, 6 points, and then now you're up 11 points. And if you position it correctly, and then even if you added on this breakout, if this was kind of how you're managing the trade, then you're in great shape. So I would move my core up, and even if you got, took some profits and then still in it, this could be a short type swing of 3 to 5 to 7 days. This doesn't have to be a trend following trade where you're looking to capture a month or 2 months or 6 months worth of moves, but this is how short term, 5 to 7 days, you can capture these nice moves. All right, let's see, Gino, you've probably been waiting. You wanted to go over ZM. Okay, I got about 15 minutes, showed you how to do my workflow. If you guys want to, you can set up most platforms to auto enter stops upon entry as well as, yeah, exactly, GP, exactly. I will use the bracket function in IBKR a lot, and it will start taking me out of a trade if the price comes back with profit. Okay, so Zoom. The news from Facebook came out on Friday. All right, I tell you what, I don't know what the volume was either. Also, okay, I'll tell you what I do. Let's just start with the weekly. So the weekly high, this was interesting because I did a trade review on this. So the weekly high was 164.94 for the previous or all-time high. So we come up and tested it. Now, void the news. Okay, let's just say we didn't even know the news was coming out, but we tried to test this previous weekly high, 164.94, and failed and came back down. Let's say I didn't know any of the news, but I'm looking at price action only. Okay, so for me, that's just a failed weekly breakout. Nothing more, nothing less. Is this an area where I would anticipate to take profits? Absolutely, because it's a previous week high. It tried to get over it. It couldn't get over it. So that just flashes, let your foot off the gas. If you're in from over this area or even around this area, let your foot off the gas, take some profit, scale out, and keep a core position depending on what your entry is. So then obviously we did have news come out. So we'll look at the daily. Same deal. These are the same pivots on the weekly that were showing on the daily. All right, same area. We tried to break out. We opened way up and then pulled back. It's just flashing a signal for me. Just by the price action, hey, guess what? You know, you should probably be taking some profit. You know, that's all it is for me. Now, what would I be watching Monday morning if it gapped down? I would absolutely be watching this 152 to 155 area, because that's a previous area where prices tested and broke out of, and that would need to hold for me to stay in a core position if I was in from down here or even in this area right here. That's all I would be doing. So then I'd flip to a 60-minute, and you can see pretty much the same areas. Whoops, I don't want to fill that. There we go. Same areas. So when the price opens on Monday, I don't know what it's going to open at. So price could open in between this 138 and 155 area. But I would, and then down here we have like 125s, 125, 126. There we go. So for me, I'd be setting an alert around the 140s area to see if 138 to 140 to see if it's an opportunity, and see if price holds. The 20E on the daily is right here around 144. But if we open in this area right here and price actually holds, then it definitely could be an opportunity for a day trade. But again, so that's how I go through that weekly, daily, and then on down to the 60-minute. And then if you're able to watch intraday, you could watch the 5-minute. And it's the same areas, so we'll flip down to the 5-minute. So you're watching 155 and then 140. So we would be able to watch down here, 155. You could even zoom out a day if you wanted. Go out 5 days. So same deal. You could be watching this 154 to 155 area to see how price reacts, and then 138 to 140 and zoom in and go from there. I probably won't be watching it on the 5-minute chart, but I'll just have my alerts set and kind of go from there. So, all right. Throw any other charts in there you want to go over? You're welcome, Gino. I think people post anything else in the room. Looks like CV is going to have the video up in a little bit. Here is, this is, whoops, Nick posted, oh, what the heck? Whoops, sorry about that. Move that over. There we go. Nick posted in the room the earnings for this week. So Earnings Whisper puts out a nice calendar that shows you everybody, and it's packed full, it looks like, with the major people. Visa, McDonald's, Twitter, Apple, AMD. Yep. So a lot of the big names are reporting this week. So again, it may be a week not to do much since we have so many big names coming out with earnings, and might be, you know, market movers. So I would just watch some stocks going forward. We've had a huge move from the bottom. So for me, I'm in the less is more right now until we decide what we're going to how we're going to resolve this overhead area on SPY and SPX, or SPY, QQQs, and IWM. That for me, that's just, oh, hold on, sorry guys. There we go. Yeah, so for me, I'm just watching how we resolve this area, basically this 2,800 to 3,000 area. You know, we could chop around here for, you know, weeks, pull back, flag. But if for some reason we do start moving through this area, it's going to get interesting pretty quickly, because again, like I showed on the SPX chart, there's just not much overhead. Here we go. And here's the indicator chart that a lot of guys ask me about. So yes, we're overbought on the daily, but that doesn't really mean anything, because you can see in this section right here, we stayed overbought here, basically from October all the way to February, basically, and then we started seeing a little bit. But that this could just chop around in here from 60 to 80 and stay overbought, and we can continue. But there's this is the big level right here, 280 to 298 to 300. But above this here, it's kind of all bets are off. What happens from above there? So I don't know. We'll see. Maybe come up there and test the 200 day, and then decide from there. But for me, this week, this was actually very constructive action, because we could have easily pulled back on this first nail of this area. People could have definitely started dumping stuff because they held from this area right here, I guess bag holders, as CV calls it. But so we'll see what's happening going forward. All right. Any other charts? If we're not, then I'll call it a afternoon. Sun's finally coming out here, so. Yeah, this one's recorded. Yeah, this one is recorded to the cloud, so it'll take a minute for it to process, and then I'll throw it up on YouTube, and everybody will be able to watch it. So, like I said, we didn't do too much. We just kind of flipped through my workflow and flipped through a few charts, and went over some stuff. Probably what I would like to do going forward is I don't like to pack all these together, and do one every day or whatever. So probably what we'll do is like a weekly. Weekly one to go over charts, unless there's just a lot of charts, people want to go over. But again, we got 7 minutes. I'm going to go for 7 more minutes, but my way is not the perfect way. Like that podcast I posted, people have to find what works for them. All I can do is try to help you, maybe through the mistakes that I've made or the mistakes I still make every day, and the psychology of it. I mean, those guys nailed it in that podcast, the psychology of it, how you can just have everything set up and you can have a great trade and you do something stupid. And, it, it just, it is just the epitome of trading. I think it's just the same thing that everybody struggles. What's interesting is people only see what people post on Twitter, or winning trades and not losing trades. I mean, so everybody thinks this is just so easy, and all you click and you just don't deal with this, and it's like, where do I enter, where do I get out, and do I need to listen to the news, and do I need to watch this indicator and that indicator, and you know and then by then you're just paralyzed and you can't even click the buy button because you're so freaked out and scared. And then you bring the emotion of money into it, which always gets people amped up. So it's just, that's why I always try to be even keel, about everything. And you can be even keel if you have a good risk management system, because when I enter a trade, I know this is what I'm going to lose. I don't look at what I'm going to win, like this shop trade or Amazon or whatever. People keep emailing me. I mean, or sending me messages. I look at what I'm going to lose. This is the amount I'm going to lose. And then after that, everything else is, cake. Everything else is cherries on top, because we're in the trade and we're making money on the trade. But you don't make money on the trade until you exit the trade. Okay. So, I could walk in tomorrow and shop could be down 100 points from some accounting information. Okay. And then, I lost a bunch of my profit. That's what I try to tell people is tier in and tier out. You don't have to be all in. You don't have to be all out all the time. You can take some profit along the way. If you're in a core position, let's just say 25, and you build up to 50, you can take, 10 shares off. You can take 15 shares off at a 20 or 30 point win. You pull out $300. That is fantastic. And then move your stop up, or whatever that number is for most. But let's just say you only made $5 on the trade, tier out 10 shares or 15 shares. You made $75. That's $75. that you just made by entering a trade, just maybe not doing much, no physical labor, and then you're done, and then you go from there, and then that's kind of how you do this. But again, we all struggle with the same thing. So don't think that just because we post or I post these trades and, we're, making money on these trades and people send me, hey, I made money on this, great, but it's the same things we deal with day in and day out. Obviously more now since all of my kids are home, like they said on there, we can't really go anywhere. It's just your whole kind of mantra is different. Because I prefer not to watch as much. I prefer to set up my trades and enter and just let it go. So while in Captain, so he's posted a question. He said, while in a multi-day flag, how do you make your entries? Wait for a dip into the bottom of the range or just go for it with a stop below and hope for a break higher? That's a very good question. So what I was saying on my other podcast is like Adobe in here, I would prefer to drop down to a 60-minute time frame and catch an area that, unless you're using the daily, so then you would be using kind of a weekly daily, but I would prefer to set some alerts and enter around the bottom of this range right here. So on the 60-minute time frame, the 20E, I'm going to say this over and over and over. The 20E is the 130E on the 60-minute time frame. Okay, so CV uses the 9 and 21, right? I believe, if I'm right. I followed him for so long, 8 and 21 maybe, or 9 and 20. I don't know. Anyway, it's here nor there. But so I've preferred to buy a pullback to the 20E. He says that all the time. In a strong stock, strong stocks will hold the 20, the 50, the 200. Again, arbitrary lines. But what happens is most of the time is these arbitrary lines match up with areas where price has been before. So preferably, I want to enter down in here somewhere. Okay. Now, multi-time frame analysis is we look overview for me is weekly, then I go down to the daily, it's flagging on the daily, so I drop down to 60-minute and I look for an entry. So I'll enter on the 60-minute, and this is able to provide me a better risk reward, profile if I'm going to do a short swing. If this is going to be a long-term swing for me and I'm looking tons out, then I'll use a daily and I will try to get a 60-minute entry, but I will use a daily type stop, okay, because I want to capture the huge move. All I'm trying to do is zoom in and just get a better risk reward. Captain, I'm never entering in a total consolidation, like just in the middle of a range. And if you will watch stocks over and over and over, they range. It's just how they do. They move, they flag, they range, they break out or break down. That's why I post in those intraday charts all the time. I'm like flagging. It's in a flag. It's a flag breakout or flag breakdown. It's simple. That's why I keep it as breakout, breakdown, flag. And what we're doing right now on Adobe, daily time frame, we're building a flag. 60-minute time frame, we have a range. It is a 23-point range, but this is a huge stock, so that's what happens. So I would prefer to enter closer to the bottom of the range, closer to the 20E on the daily, and then be able to match my risk with this, and then be able to stay in this. So what I would be looking for is price to reach the top of the range and pause or consolidate, maybe click closer back to the range, but then break out. So I'm already in a starter position. So my starter position might be much smaller than the position that I want to get to on my full size position. So starter position here, I'm in good shape if it starts moving here because I already have a profit, and then I can add to it here. And then, so I'm not hoping it breaks out. Okay. I'm already in a position that's starter, and then I can manage the trade. Okay. Hopefully that helps that. Is there volume at price overlay in IBKR like you did in stock charts? Don't see it anywhere. iPhone, that's a good question. I don't know that. I don't use it in IBKR. I only use IBKR for alerts and entries. But stock charts is so simple. It runs on your iPad and your phone, and it's like no resource hog. And that's why I continue to use it over and over. I know people like Toss and other things, but I can use stock charts anywhere on any computer. And just it's simple glancing. Which brings me another point, Captain Cautious. Let's throw on the volume by price bar. Dang it, I always go the wrong one, and see where we're at. Okay, there we go. So down here is a pretty good area. even though this held and there's not a lot of trades here. So this is just kind of building this range. So hopefully that answered your question. In this market also, I guess this probably goes back to this question. We got a couple minutes left. In this market right here, it would be, I would prefer to buy pullbacks just because breakouts are probably less likely to continue moving unless we get a total push above this, 298 to 300. And I always love to buy pullbacks for me on strong stocks that are getting supported. Buy pullbacks because your risk reward is a lot lower and easier to manage than to buy a breakout. Then when the stock breaks out, then you can add to your position, but you're already in the position. And so you've already got a profit. So when a lot of people are just buying, I may be taking some profit or adding to my position. So, all right, good. All right, have a great weekend, everybody. Hope this helped. You can DM me in the room or send me some questions, and maybe we'll do it next week. So, all right. Have a great weekend.